Hi everyone, welcome to the OctaFX live trading session. My name is Ambrose Ebuka, and today we're going to analyze some pairs and also, pay attention to how these instruments have performed in line with our last live trading session. But before I go into further details, you can go ahead and let me know your name and where you're watching me from in the comment section. So go ahead and let me know your name and where you're watching me from in the comments. You can also let me know if this is your first time. I hope you guys all had an amazing trading week, last week with the NFP and all the amazing volatility that NFP brought about. In Forex, we trade volatility. We want the markets to move so that we can make profit. But yeah, let me know your name and where you're watching me from in the comments. And in the course of this live trading session, if you have any questions or any currency pair that you want me to analyze, you can go ahead and type those in the comments and I'll check them out. Okay, very quickly, let's just go over, amazing offers and bonuses that you can get by using the promo code Ambrose E100. This is a promo code that gives you 100% bonus to your deposits. To apply this promo code, you can scan the QR code or follow the link in the video description, or you can manually impute this promo code when you want to make a deposit. There is a section where you can type in your promo code, and then you type in Ambrose E100 and you will get 100% bonus on your deposit. The promo code is valid until 31st May 2023. All right, let's look at the comments. Let's see who we have here. So Jit from India, I hope I pronounced your name correctly, but welcome. God's Time watching from Abia State. Mr. Narayan says hello, welcome. Donald from Port Harcourt, Nigeria, welcome. John Victor says it's his first time, welcome. I believe that by the end of this live trading session, you would have increased or improved your knowledge about Forex trading and analysis as well. Korede from Ogun State, welcome Korede. Arinze from Nigeria, welcome. Victor says he's from Lagos. Alright guys, thank you all for joining. I'm going to go straight into checking the news as usual because, that's what we want to do. That's the first thing that we are going to do. And why do we check the news? It's important that you look at, economic events, because these are the major things that drive markets. These are the major things that drive prices. So you want to check what's going on economically in a country, and that can give you an idea of the strength and weakness of the domestic currency of that country. So the most recent employment statistics for the UK were issued today by the Office of the National Statistics, and we have the UK claimant counts change for February, which came in at minus 11.2k compared to the market forecast of minus 12.4k. Give me a second, guys. I'm having some. Okay, we're good. So you're saying the reports minus 11.2k compared to the forecast where we had minus 12.4k, and this reviewed a lesser fall than expected. In January, you can see it here, the UK's ILO unemployment rate decreased from the expected 3.8% to remain stable at 3.7%. So this GBP economic event didn't bring about much volatility to the markets, right? And we had to now turn our attention to US CPI, which, I mean, if you traded the markets today, you'd have noticed the amount of volatility it brought. We're also going to look at that in the charts. But yeah, so moved our attention to the consumer price index. And if you don't know what it is, it's a measurement of price changes based on a comparison of the retail prices of a typical shopping basket of goods and services. And when you see X food and energy, it means food and energy, or excluding food and energy, because food and energy are removed from the calculation because they are volatile products, right? So after this US inflation data was released, we saw that the US dollar gained some momentum. As we anticipated, we're seeing that the US consumer price index increased by 0.4% in February, right? The annual rate dropped from 6.4% to 6%, and we saw a 0.5 increase in core CPI, which was slightly higher than the 0.4 market consensus. Now, we're going to pay attention to how this data or these reports are going to drive the markets for the rest of the week and probably next week, because we still have retail sales coming up tomorrow. We have Michigan Consumer Sentiment Index coming up on Friday. But however, the market's reaction to the CPI so far suggests that a rate or interest rate hike is still possible. But we have to wait till tomorrow when we get the reports from produce price index or retail sales, which should give us additional information about the US inflation. So if you want to get access to this data or these reports, you can just use the OctaFX economic calendar. You go to OctaFX.com and then you click on analysis and education. Under analytics, you're gonna see economic calendar, and that's where you get access to all this information. You can change your time zone. You can set it to strictly high impact events because as the name goes, the events that bring about high impact movement to the markets. And that's basically it. If you don't understand whatever the report is in a day, you can just click on any one of them, and there's a detailed explanation that OctaFX has provided for you to understand these reports and why they are important to you as a trader, and also what you should expect, if it's going to gain more strength, if the currency would gain more strength or the currency would reduce in value out of any of these reports. So you can take advantage of this and improve your analysis fundamentally and technically as well. All right, guys, we're going to go over to the charts right now, and we will start with the dollar index. Remember, if you have currency pairs or instruments that you want me to check out, you can type in the comments. I'll look at the comments to check out your currencies. Okay, we're going to start with dollar index, obviously. The dollar index is a measure of the value of the US dollar relative to a basket of foreign currencies that include the pound, the Canadian dollar, the yen, Swissy, euro, and Swedish krona, right? And I basically like to use it. I basically like to look at what's going on with the dollar index first, because I trade major currencies: pound dollar, gold, euro dollar, and if you trade these currencies as well, you would most likely want to look at the dollar index because it can give you an idea of the strength and weakness of the dollar. You can use that to determine, the direction of these currencies that are paired with the US dollar. But before we look at that, I've already highlighted the framework that can guide you with your analysis. For those of you that said it's the first time, you can actually utilize this framework. It's basically what you need, or the things that you need to see to help you identify where you can place a buy trade or where you can place a sell trade, and it includes market structure and key levels. And you can understand market structure using key levels like support and resistance levels. You can also use Fibonacci, which I would also use while we are making analysis on these currency pairs, so that you understand, where to use it and how to use it. Your framework should also consist of entry triggers, which can be chart patterns, moving average, breaks, and bounces. You can also use swing lows and ATR, SL, and TP for your exits, because if you want to open a trade, you need to identify where you want to close the trade, right? So you don't just get stuck in the middle of a range or just get stuck in the middle of a trade where you don't know how you're going to close it or if you should actually close it at that time. So you want to identify areas where you want to exit the trades from, and you also want to apply proper risk management on your trades. You want to use conservative lot size, and you want to use a proper or a moderate risk to reward ratio, right? So these are the things that can make up your framework, and it's essential for trading. Okay, so first we're going to look at how the dollar index has performed in line with our analysis. In line with our analysis last week. So I think, yeah, we considered the possibilities of the dollar index getting it to, making a retest at this previous yearly high. Obviously, it was here in January, and the market was trading around here at the time, and then we considered that possibility. We saw how the market reacted to NFP, and it finally made that retest, but we're not seeing a sustained bullish momentum above it, and then the market decided to pull down, reacted to the 200 period moving average, but finally broke below it, and then we're coming to just catch some breath around here in the dollar index, right? The dollar index can go either way. Remember that we're having retail sales tomorrow. We still have additional high impact events coming up for the rest of the week, right? But I'll be paying attention to these levels. Let me just take this off. From here. So these are some of the important levels that I'll be paying attention to, I think, here as well. For the dollar index to trade within any of these levels, we have 102.6, we have 105.0 in the coming days, right? I expect a consolidation here and then a breakout, which would give me, strength or weakness indication of the dollar index, and I can use that to aid my analysis across other currencies that are paired with, is that the correct one? Yeah, that are paired with the dollar index. So we can just dance around here a bit and then move to the upside, or we can dance around here on the dollar index and just break below to the downside to make a retest here and then start to push back up. So that's what I'll be waiting for. That's what I'll be observing from the dollar index. But it doesn't mean I'm not going to make analysis on other pairs and trade other pairs. What you're looking for in the market is opportunities, right? You're looking for opportunities, and you may not see an opportunity in pound dollar, but you see an opportunity in Euro JPY or Aussie dollar or something else, and you take the trade, right? So yeah, dollar index, this is what we're waiting. This is what we're going to be looking out for. Remember, retail sales coming up tomorrow. That can also drive prices, and that can give us a quick indication of how strong the dollar is or how weak it's going to be. Okay, so I'll be looking at pound dollar first. The first currency pair we'll be looking at pound dollar. I'm already seeing your currency pairs in the comments, and we'll look at those as well. I'm seeing gold. We'll look at all those currency pairs. Okay. So we had this zone mapped out for pound dollar last week, where we expected price to get down to just, take out some stop losses, grab liquidity, and move back to the top side. It didn't really get there. How many pips away? About 10, 20 pips away. right? And the market began to move back up. We got to this key level, dance around it, just consolidated a bit and finally broke above. So just gonna take this off. And finally broke above it. I think this was during NFP last week as well, and then we broke above it. And I believe that you guys are actually seeing the reason why, or understanding why you should have key levels, or utilize key levels with your analysis. And the reason is because either way the market goes up or down, it's going to react to major or minor key levels. It's going to react to it, and then you can now start looking to trade the breaks or the bounces of those key levels, right? So we're here, we've broken above it, broken above this one as well, obviously reacted to it, but finally broke above it, broke above this key level as well. This has served as a resistance level for pound dollar. I think I'm just going to indicate that as well. And I was seeing this super massive bullish move to the upside, has broken above all these key levels. And what's the market doing? It has finally come to the rest at 1.214 to 1.22 levels. This is about rest within 60 pips, right? Not really a good time to start looking for opportunities here, because the market has not really shown if it's going to continue to the upside, or just break below and get down here and continue to push to the upside, right? So it's not in a very ideal place to start taking buys or sell trades. And with this move, it's basically like working out in the morning, or like using the treadmill, or doing your morning jogging, and you have a target of like 5 miles or 2 miles that you want to run. You could achieve the 5 miles or 2 miles, but at some point you'd run a little and take some rest. That's just an illustration of how the market works as well. After an impulsive move, yeah, even if it's going to get to, let's say the market wants to get to this level, right? It's going to move, rest a little bit. That was the wrong one. Before it continues to, the targets, the price it wants to get to, right? So that's what we want to look out for here. Let me take that off. That's what we want to look out for here, because I mean, the market is currently kind of consolidating, and we can trace the last one. We can trace. This has to come up a little bit. We can trace all this retest to last week, right? Came up here, bounced below, broke above it, could not sustain, bounced below, bounced 2 more times. So we want to see a break, probably a reaction at the retest, before we can start looking for buy opportunities on pound dollar. I'm currently bullish on pound dollar, actually. I'm just gonna be patient for this correctional move to be formed, and then if I see a breakout to the top side, then I will take the trade. So I'm just seeing if I can look to the left and connect this as well, and obviously I can. You can see that this is why you can still take it down to this side, but I don't want to go too far. But you can see that this is why this is also a minor key level for the pound dollar market, and you can see that it has always bounced on these levels. So we want to identify breakouts. Probably if it consolidates here for a bit, let's keep it simple. If it consolidates here for a bit and then it breaks out, we come back here, and then push to the upside. So that's what we're looking out for on pound dollar. So if you trade pound dollar market, you can obviously be patient for this correctional move to completely form. Yeah, so wait for the correctional move to just completely form. You can dance around here, you can pull back to the downside a bit, but what we're looking for is that nice breakout, and then we can just, you know, rally it up to the top. Alternatively, we can still stretch this a bit and use this as a level where we'll be very, very, very comfortable to identify buy opportunities in the pound dollar market. Right, so we've had that massive move. So the market can still find its way back here, and then, you know, we look for buy opportunities to take the pound dollar market to the top side from this level. I'm also going to identify that as well. I think we're going to change the color to red. All right. So that's my thoughts on pound dollar. I'm going to move over to euro dollar as well. We've had our area of liquidity for euro dollar. Price didn't get there. I think, yeah, this was last week. Price didn't get here to, you know, give us that opportunity to look for buy trades, you know, hop on buy trades from here. But what happened was the rejection started at this support area of support that we found. Let me just take this off and identify the area of support. So you can see that this level served as an area of support for the euro dollar market in the past. We can still trace this back to previous times here. You know, you can see that it served as an area of support in January 3rd. It also served as an area of support 24th, 25th February, and on 8th March also served as an area of support, and the market reacted and pushed back to the upside, right? Broke above this key, reacted, broke above the key level, got here, reacted, broke above it, and now we're currently trading above 1.07 cycle levels. I'm going to also indicate that as well. Okay, so one thing we can do on euro dollar is to extend our support trend line. And look for buy opportunities when the market gets down to this trend line. Another beautiful confluence would be if it gets down to the trend line and it also aligns with this 200 period moving average, and we also have like that bounce on this minor key level. That's a beautiful time to look for buy opportunities. And when I mean look for buy opportunities, you want to see how these candlesticks are reacting to these key levels. And then if we get to see bullish momentum candlesticks, we open our buy trades and, you know, trade euro dollar to the top. Right? And this area of resistance would be major targets. So if you want to know, I'm also bullish on euro dollar for now, as long as we are trading above this trend line. If we break below this major support trend line, then I'll start to, I think, also below this key level. Let me identify it as well. 0.1.0690. So if you're able to, bounce back and then start to react, you see the, so I have to zoom in a bit so you guys can see clearly. Okay, so euro dollar market pull back to the trend line. That's going to align with the 200 period moving average. Let's show it's a nice one. Yeah. So I'll be looking at what the market does in these levels, because obviously it's going to react to this minor key level, react to this 200 period moving average. Even if it breaks this and comes down, it's going to react to the moving average. It's also going to react to this minor key level down here as well. So these are all areas where I want to look for buy opportunities to trade euro dollar to the upside, right? But if we get a break below all these levels, like if the euro dollar market finds a way to dance around here and break down and also break below this level, then I'll start to look for sell opportunities or selling opportunities on the euro dollar, because we would see that it has taken out this strong support trend line. It has taken out this first key level, taken out this second key level as well. So that's going to give us some very strong bearish indication to start to look for sell opportunities on euro dollar. Okay. Now the next one we'll be looking at is the Australian dollar, Aussie dollar. All right, so we did this last week. I just kind of left it here so that I can show you guys what happens when you do an analysis and the things that you should look out for before actually executing a trade, right? Okay. So first, why is this a key level for us? Why did we identify this as a key level? If we look to the past, we're going to see the multiple times that markets dance around these zones, here, here, came back to retest here, finally broke above it. So that's why this is a key level, and that's the reason why we expected the market to push back down here a bit before we start to look for buy opportunities. But NFP came and the market couldn't break out of this consolidation that we are looking for to go to the downside. Now, when you make an analysis and identify your levels, your confirmation to take a trade would be how the markets react at those levels. So you want to look for candlestick interpretations, right? Obviously, we're seeing this massive move. We're seeing that the market is now, pushing to the upside. What we can expect here, let me just manually draw this manually, can be a drop out of this bounce to the downside again, right? But if you notice, that was what we expected here. And what happened? We didn't get that breakout. So when you have a consolidation, you can, due to fundamental analysis, you can use fundamental analysis to identify, strength and weaknesses of currencies. That can give you an indication of where markets would possibly go after a consolidation. But your confirmation to execute the trade to that direction would be if the market actually breaks out and sustains that breakout from the consolidation, right? Sustains the breakout from the consolidation, and then you can have your confirmation to execute the trade, right? So we're having AUD USD react to this minor key level here. It's a minor key level because market came around here to find support. We're not seeing any follow-up from this reaction. I mean, it tried, couldn't break below. You know, we saw the results from NFP last week. I mean, the market, we've seen the market react to NFP last week. We've seen the bounce, and then the market has moved up to the top. Reacted to this minor key level. We've seen that break above the minor key level, retest, and has continued to the top side, right? So one thing you can identify here is that the market is actually crawling to the top. We're not seeing any clear, you know, massive move. It's still crawling and bouncing off, you know, the support and the resistance of this crawl to the top side, or this retracement to the top side, right? Just gonna zoom in. Another very important thing we can also identify is how the market has reacted to, just gonna take this off so you guys can see how the market has reacted to this area, this breakout level. You know, the market broke out of here in the past, and you can see that it has gotten to that point, was rejected, has made another attempt to retest at that level. It has rejected again, and it's headed downwards. But obviously, for also identify bearish opportunities on the Aussie dollar market, we need to see a breakout of the support trend line of this consolidation, right? A breakout, and then see the market get to retest at this minor key level. Obviously, you can see here, and then start to look for sell opportunities to the downside. And our targets, our major targets would be here. You can take your targets from swings, but this is where the major targets would be. Another interesting area where you can identify your sell opportunities on Aussie dollar would be if the Aussie dollar market is able to rally up to this level, right? That's also going to align with the 200 period moving average. If you get that nice bounce and the rejection, then you can trade the Aussie dollar market to the downside. So that's what we want to look out for. But obviously, for it to get to this point, we need to pay attention to how it reacts to this breakout level. You can see that it was rejected again. So we want to see how it reacts here. If we get that nice break above it, and then the rejection at these levels, then we can start to look for sell opportunities for Aussie dollar to the downside. So in the meantime, we're still bullish on Aussie dollar, short-term bullish. We're going to see how the market crawls up, reacts to this level. If it breaks above it, we're also going to pay attention to how it reacts here to take our sell trade. If we get the break above it as well, then, you know, strong bullish momentum and we're going up. So you can start to look for your targets here. Okay. Let's look at pound yen. Pound yen has been quite tricky in the past week. We still have our resistance trend line maintained. The price has not been able to sustain any breaks above this resistance trend line. And if you want to know, this resistance trend line was drawn on the daily time frame. I'm going to go over to the daily time frame. for you guys to see. So we've seen you've seen the bounces that the pound yen market has made on this strong daily resistance trend line. We've seen another break above it, wasn't sustained. The market pulled back. Seen another break above it again, wasn't sustained. The market has pulled back. Just gonna go to the 4-hour. So you can see that this break was actually made today. Broke out of the resistance trend line. There was no bullish momentum sustained, and then we're back inside, right? So in order for us to identify buy opportunities on pound yen, we want to see a sustained break above this trend line. If you can get that sustained break above this trend line, and obviously now it also has to be above this resistance horizontal line as well, which I've indicated, right? Let me type it for you guys. Because this has served as the highest point this market has been at today. So this is the daily high, and we have to respect that, So the trend line is still valid if it breaks above it, but this is also valid as well, because we want to see the pound yen market take out this daily high for us to be sure that we have strong bullish momentum, and then we can start looking for breakouts and retest and then trade pound yen to the upside. This is going to be our major targets. Let me just identify it for you guys as well. It's going to serve as our major targets for the pound yen market. But yeah, so if that happens, then we want to look for buy opportunities. But as long as we're trading below this trend line, this daily resistance trend line, we're still bearish on pound yen. We can still identify, we can still connect this. You can still connect all these daily highs together, and you can see how the market has reacted to these daily highs as well. You can see all the bounces that it has made and the rejections, and this can also serve as a key level for us. I think I'm gonna have to take out some of these drawings. Because the chart is starting to look busy. Okay, we still have to respect this. We still have to respect this resistance trend line on the pound yen market, because for every time the market got to its daily high, it respected this resistance trend line, So as long as we're seeing that, as long as we're seeing the JPY market trade below this daily trend line and trade below this one as well, we're still going to look for bearish opportunities. I mean, if we get to see a strong bearish momentum from this candlestick, not really looking strong right now, because we're seeing like this market close indecisive. Let me just zoom in a bit for you guys to see properly. So we're seeing this candlestick close indecisive. We're not seeing really much of any interpretation from bullish or bearish momentum on this candlestick. The next one is not really showing us much momentum to the downside. I mean, if I can get something like this, right, or something like this, then that's good momentum. I can start going for sell trades, right? So if I can get like a huge, just gonna do an a cappella painting for you guys. Yeah, so if I can get that right here, and then a break below this minor key level, then you can start taking targets here, looking for sell trades on pound yen. So the market is not really showing us that. The pound yen market is not showing us that at the moment. Still creating indecisive candlesticks. So we want to see if we can get that break above, or bullish momentum to break below this minor key level, and then join the direction or the trend. Okay, that's my thought on GBP/JPY. If you have any questions concerning any of this analysis, why this is this, why that is that, you can type in the comments. I'll check the comments. I think I saw someone talk about gold. So let's do a quick check on gold. Mm -mm -mm. All right. Okay, I'm going to extend this because now we're seeing how the market is reacting to that key level. So I'm just going to extend that as well. I'm also going to extend this one as well. I'm working with all these key levels because the market tends to, react to these key levels, right? So we're seeing that the gold market has found its way to break all these levels, break above, and it has finally come to rest here. Currently in the markets, I mean, today where we have all this volatility coming up on gold, not on gold, on dollar, coming up on the pound markets, we're seeing that most investors are, moving their investments to the gold markets and using gold as a safe haven in these times. And that's why you're seeing that the gold market is actually, breaking all these levels and finding its way to the upside. Gold is currently at 1910 key, 1910 psych level. Also going to indicate that for you guys. Can we connect that? No, we can't. Okay. All right, so we're seeing the market react here. Obviously, remember the explanation I gave you guys, or the example I gave you guys on using a treadmill and, just running for hours. You have to rest before you take off again or before you go back home, right? So that's what we're seeing on gold right now. We've had this massive move, or this impulsive move to the top side. Obviously going to have a correction. The correction can bounce on this zone to form like a triangle pattern. I think I have to push this out a bit. Yeah, to form like a triangle pattern, and then we can start to look for breakouts of the triangle, so either the top side or the downside. Well, I'm currently bullish on gold because it's serving as a safe haven for investors at the moment. So still looking at gold, consolidating a bit and then breaking out to the top side. So it can be this triangle. It can also be, what else can it be? Yeah, it can also be a rally to 1870 levels, and then the market starts to push up from here. Right? Remember, the reason why you make your analysis is because you want to find the best prices, the best areas on your chart where you can execute your trades, right? You don't want to execute your trade in the middle of a range where excuse me, you don't want to execute your trades in the middle of a range, and then, you know, let's say you have something like this, and then the market starts to dance and you execute your trade here, then you start to see bounces off these levels and you just caught in the middle, right? Because you placed the trade here. You want to look for best areas like here or here if you're looking to trade ranges, or if you want to trade a trend, you want to be patient enough for the market to make its correctional move completely, and then you can start to look for opportunities at the breakout of that correctional move. So still bullish on gold. I'm just going to be patient for this consolidation or this retracement to be done. Another area where I could be expecting this consolidation to be done would be, yeah, just gonna map that out. So we could get that short-term sell to the downside. We could still break above here, and then market could start to rally up to the top. But remember, we have retail sales tomorrow, and we still have you know, a little more high impact events coming up. We have the Michigan Sentiment Index on Friday. I personally don't think that that's going to bring a lot of volatility to the dollar markets, but we'll keep an eye out on the economic events. So I'm just looking at the comments, because if you have pairs that you want me to analyze, if you have currency pairs or instruments that you want me to analyze, you can type in the comments. Or if you have questions concerning this analysis or an analysis that you've made, you can also let me know. Gold, I've done gold. Those do we have? USD card, okay. I believe we looked at USD card last week. I'm going to identify the key level for you guys. We're still on this. Okay, take that out. Just going to drag it to this so that you guys can see properly. So we've had this nice symmetrical triangle and the breakout of the triangle. We also had this wonderful breakout from this key level straight up. I think this was due to an economic event. It just broke straight above the resistance, and then of the market, the USD card market has pushed back down to find an area of support here, which was, you know, previously a resistance level for the dollar loonie market, right? This is a resistance level because you're seeing that whenever the market goes to this point, I think we can still trace this back a bit, but let's focus on the most recent price action. Okay, we've seen that whenever the market goes to this point, there was a retest, a retest, finally broke above it. So obviously, if you're pulling back down, we're going to respect this level, right? And this pullback down is actually not so straight. It's like a crawl, and we're seeing that the market is reacting to these levels, right? So what you want to look out for in the dollar loonie market is that you want to see if we can sustain this bearish pressure below this resistance level, right? We want to see if the market can continue to push back down. It's obviously going to react here. We're going to see some indecision candlesticks. I don't really think that this consolidation here is going to be for a very long time because of the economic events that we're going to have tomorrow. So I don't think that this is going to rally for a long time. So we'll pretty much get the next direction of the markets tomorrow. So we could, the dollar loaning markets could just trade at this level by the end of today, early tomorrow. Let me just go straight to the economic calendar so that we can find out the exact time that retail sales. Okay, 1:30 p.m. and this is in Nigerian time, so you can always change this to identify what time is going to be released in your time zone. So yeah, I expect USD CAD to just trade around here to the retail sales. I believe that that's going to bring about some volatility to push the markets either above to continue to the top, you know, to give us that very beautiful breakout and retest, you know, or we break out and then we just continue to push back down. And obviously you want to get your targets here, right? This is going to be like a major target. Let me just indicate that properly. So we have to push this up a bit, because now this aligns with the most recent swing low, and it's also going to align with the 200 period moving average, right? If we get that nice pushback to the downside after tomorrow. So you want to be patient with USD CAD, you know, see where this event is going to drive the prices. So I hope I answered your question. I think Victor was asking. After gold, please check Euro GBP. Okay. I haven't really looked at Euro GBP in a while. But let's see, we can always do like a top to bottom analysis on this. And I believe this can also help you learn a few things about analysis. So first, I want to go to the daily time frame to get like an overall, you know, idea of what's going on in the Euro pound markets. Okay. So we can obviously identify that this is, you know, the market is just pushing up. It's an uptrend. It's been in an uptrend for a very, very long time. And this is on the daily time frame, guys. So I'm just going to pay attention to the very recent price action. I think I'm going to trace this from here and have this one here as well. And also this one. We have another, yeah. This one. Right. So what I'm basically doing is mapping out some key levels because we're obviously seeing how the market has bounced off these key levels. You're seeing the bounce here, I mean, 3 bounces here, another one, another one, another one. And today the market has actually bounced back from here again and is pushing back to the top side, right? Not really much information on the daily time frame, which is why we're going to go over to the 4-hour time frame. All right. So I'm gonna have to connect this trend line. It's an obvious one. Do we have another one here? Okay. All right. So Euro GBP market has pretty much been trading in, I'll call this a range because it has been bouncing off these levels, bounced off, bounced to the top, rejected here twice, rejected here. I mean, broke out of these points, couldn't sustain that bearish momentum below this trend line, which is why this trend line is a significant support trend line. Just going to indicate that. All right, we had a nice break above this major key level. I think I need to indicate that as well. Breakout above below it, but we couldn't break. Euro GBP couldn't break below the significant support trend line. We had the pullback, and after some days, I think 2 weeks, the market now came back to find support at this major key level as well. And you can obviously see that this major key level was in line with this trend line, and this is the thing I always talk to you guys about, the power of confluences, right? So when a lot of things, when you have your levels mapped out and these confluences just happen at once, that's your indication, right? That's where you have to pay more attention to what the market does there. Okay, so we're saying that we had a nice bounce off the trend line, we had a bounce at the major key level, and the market began to push back to the top side. Euro GBP still looks bullish to me because overall trend of the daily time frame is an uptrend. We could have series of consolidations here. Nope. And break out from that consolidation, another one, and rally up to this area of resistance. I think I also need to identify that as well. Right, so still looks bullish to me. You can actually hop on buys, but one thing you should look out for is, let me go to the lower time frame. Let's see. Yeah, see, I already had the consolidation done. So if the market can rally up to these levels and you see the reaction from the market, how it reacts to this 200 period moving average, if you get a nice and decent breakout of the moving average, then you can start to hop on your buy trades, because it's going to align with the retracement, or should I call it the consolidation. Let me just take out some of this so you guys can see clearly. All right, so if we have that rally up to this level and the Euro GBP markets can break above the 200 period moving average, we have that nice and decent retest, push up. So you want to observe how the market reacts to the 200 period moving average and also how it reacts to these levels, right? I'm going to also indicate this one as well. This one as well. And this is on the 1 hour time frame, guys. And just for you to basically understand what's happening in the markets like properly, if you look at the daily time frame and you don't get a lot of information, you can go to the 4-hour time frame. If you don't get a lot of information there, obviously you're going to get some information, but if you're not really seeing like details, you can go to the 1-hour time frame, right? And then it can give you, specific detail on areas where you can identify momentum or expect momentum and use this as an opportunity to buy or sell, right? Just like we didn't see this on the 4-hour time frame, but we're seeing it on the 1-hour time frame. We're seeing this key level, this support here. There's also served as reacted here, served as resistance here, finally broke above it, right? So that's why it's a key level. This is also a key level for us because we're seeing how the market has danced around in these levels, broke above it, but couldn't sustain, reacted to the 200 period moving average, and we're down, down into this 0.8820 and 0.8850 levels, right? So that's why you should always map out your levels because they can help you identify future direction of prices. So Euro GBP, what you want to look out for is how the market reacts when it gets to 0.8850 levels. Obviously, that can align with the moving average. I'll just indicate it in zones. So this is from 0.885. Yeah, 0.885. So you can get that bounce to the downside from that level. If you see the rejection, if you see how price reacts, you want to see all these rejections. And even if I go lower for, okay, let me just go lower for the sake of a better explanation, right? If I go lower, you're going to see how the markets reacted to these levels, right? You're seeing all the spikes, you're seeing the wicks, you're seeing the rejections, you're seeing this nice rejection here as well. Another one, the same thing happened here. You saw the move, the breakout, the pullback, the breakout, the pullback. You're seeing this rejection as well. You're seeing this rejection as well. So that's what you want to look out for. And that's why you want to pay attention to these key levels to see how the market reacts to those levels. And then you can use that as your indication to identify buy or sell trades. And I hope I answered you correctly on your Euro GBP analysis. All right, I'm going to take one more question and yeah, we'll just wrap up. Okay, Felix is asking, sir, for someone taking trades on 1 hour and 4 hour time frame, how many pips can be used for SL? Interesting question. So when you trade, taking trades on 1 hour, 4 hour time frame. So if you take trades on 1 hour, 4 hour time frame, you're in between the day trader and the swing trader, because I mean 1 hour time frame trades can close in a day. Still could take some time, but it can still close in a day. 4 hour time frame trades can close in a day, but for you to execute trades on the 4 hour time frame, you should be looking at days. Like you should be expecting your trades to close in days. You should also expect you should also look at your account size, because the higher the time frame, the higher the amount of pips, the higher the space in the market, right? And when you have higher space, every space accounts for a pip, right? So the higher the space, the higher the pip, but the higher the movement of prices, right? So if you're trading on 1 hour time frame, it's still pretty decent to execute trades. You can still use like a 40 pip stop loss. You can even use a 20 pip stop loss on a 1 hour time frame. You can use 50. It all depends on your risk appetite and market conditions, right? But it can be minimized on your 1 hour time frame. If you're trading a 4 hour time frame, like executing trades, because I believe that's what you're asking about. If you're saying analysis, then it's fine. You can always analyze on 4-hour time frame, but you go to the lower time frames to execute your trades. But if you're actually executing trades on the 4-hour time frame, then your account size is going to play a huge role, right? So let's say, for example, let me just go to the go to pairs. Right. So let's say, for example, this is the 4-hour time frame actually, right? So let's say you want to execute a buy trade on gold somewhere around here. Obviously, your stop loss would be, just, I mean, if I'm to execute a trade or a buy trade on gold, I'll be using, just below this lows for my stop loss, right? Now you can see that that stop loss alone is about 75 pips, right? 75 pips. And okay, let me just, okay, it's about 98 pips actually. Let's just call it 97 pips. Let's just call it 97 pips, right? So you're saying that my stop loss is going to be at 97 pips. Now, the thing is, you can still place trades on a 4-hour time frame and minimize your risk, and that's where your lot size comes into play. The things that will determine your stop loss would be market conditions, mainly. You have your risk appetite, that's fine, but market conditions should be the things that will determine your stop loss. Because I mean, if your risk appetite tells you to use a 20 pip stop loss, and you're seeing these lows that is at 96 pips, then there's a probability that the market can move 20 pips before it continues to move in your direction, right? So market conditions should be the main factor in determining your stop loss, and then you can now go over to use your risk appetite, which would come in with the lot size, so you can risk the same amount but with a larger amount of stop loss depending on the market conditions, right? This is for 4 hours. If you go to the 1-hour time frame, you would see that, let's say I want to take a buy trade. Let's say I want to take a buy trade at this breakout. I've seen a successful breakout. Obviously, my stop loss is going to be at the low of that count of the breakout candlestick, right? At the low of the breakout candlestick. So you see that the low of that breakout candlestick is about 60 pips. So now I can go ahead to also use a moderate lot size that can rhyme with my risk appetite, or my risk appetite, my trading plan on that particular trade. That will still keep me in line with the risk to reward that I want to have. So I hope that I've answered your question on stop loss and how you can determine your pips for stop loss on a 1-hour time frame and 4-hour time frame. It's going to be dynamic because market conditions are dynamic, right? It's not going to be a fixed thing, because the market changes. But let your lot size be conservative and moderate, and you're good to go. All right, guys. Just before we go, I'd also want to tell you guys about the promo code that you can use to get a 100% bonus on your deposit. It's Ambrose E100. You can apply the promo code using the QR code, or manually just type in the promo code when you want to make your deposit. Ambrose E100 gets a 100% bonus on your deposit. It's been an amazing live trading session, and I hope that you guys have learned a lot about analysis and key levels, and I hope you guys would utilize this to analyze trades, place trades, and potentially make a profit. I'll see you guys next week. Thank you.